Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is Trading the BoE and the BoJ interest rate decisions. We had really a big overnight session here in the United States, and it was really headlined by that BoJ lack of a decision and also the BoE lack of a decision. So the last 24 hours for monetary policy have been absolutely huge around the world, and what we're seeing start to develop is I see a bear market in 2025. I see the United States Fed heading up what I would call one of the more hawkish stances in the world right now, even though we saw a rate cut yesterday, but the other central bankers, they're sort of kicking back right now going, we don't really know what to do. That's why everybody paused during the overnight. So we're going to cover that here today. I'd like to say thank you for everybody that joined us yesterday on FOMC Live. Those are always a lot of fun. Mark Horp, Shane, I had an internet outage yesterday, missed the whole missed the whole show. Back today. Looks like J Powell did some damage. Bobby Bob, good to see you. J Powell absolutely destroyed the markets yesterday. Mark Corp, go back and watch the stream. I was actually getting a little bit frustrated with a good old Jay. I thought that every answer that he gave, the press conference went 20 minutes too long, no doubt about it. And then also what we saw was every answer he gave just killed any rally, snuffed out any rally. And we had a gold trade on, got destroyed. We also had a US 100 trade that got absolutely destroyed. And I'm going to go ahead and tee that one up for you here in a minute, because we don't run from losing trade ideas on this stream. We dive right into them and show you exactly what happened and exactly how to handle yourself. But right now, a little bit disappointed today. I'm sort of looking across the markets. This is, the full disclosure. This one's actually one of the prop accounts that I have that I'm trading right now today. I wanted to do some good tick scalping for you. I got really a lot of great receptions off of that. We did that the other day. But I'm watching this DOM, and right now I'm in WTI crude, and I got 69.10 bids, and we've traded up to 69.40. And right here's our chart. We've got a Bollinger midpoint right there at 69.21, which is a big deal. That's been just outstanding support. This is a 1 minute chart. And then up here we've got a daily moving average, which is right at 69.40. So if in fact, you're a rotational trader, which is exactly what we've seen today out of WTI crude, exactly what we've seen. We've seen what just sort of went up. We actually had one trade. I'll show you my performance for today in a second, but right there was sort of a big plunge. We got that trade. That was a nice trade. And then we just sort of milled around that moving average, and then we came down and started looking at that Bollinger midpoint right there. We probably could have got that one. I didn't make any of these trades, but you could see rally, bang, 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 bang. We're in complete rotation. What I'm waiting for right here is a break to my first range number, which is down there at about 69.09. Don't send me any PMs. Don't anybody ask me what the range numbers are. I will tell you that they're projected areas where we're expected to see price action become exhausted. Every day we go into it, we have an idea of what to expect from our range. I do that for the big commodities that I trade, gold and crude oil. Today, gold already made its range to the downside, an absolutely unbelievable open. We talked a lot about that. We're going to recap metals as well. I really was running the warning flag out there yesterday about silver. Boy, howdy, was I right. So I hope you guys didn't get caught long silver. That was really a bad mistake, and one that shouldn't have been made, and I'll show you why. But as far as this WTI crude oil, not real great today. I mean, I'm not really too pleased at all. We had a pretty darn good trade earlier in the day. We bought up here, got a nice bounce. But now, I mean, we really want to get involved when the price sort of breaks that equilibrium. And right now, we're seeing a heavy value area set up between about 69.50 and 69.25. The price just doesn't seem to want to move. So I'll have that trade live throughout the stream today, and we can go ahead and execute it. But I did want to go ahead and cover today's performance. This is a good look at what we had today. Let's go ahead and just blow it up and take a good look. You see right here, total net profit, we're at about $80. Gross was $20.40. Gross loss was $160. It's just been a real slow trading day. To be real honest with you, if my net profit's not up around $300 or $400, I'm not really interested. I call it a throwaway day. So for me right now, I'm at scratch. So we're going to trade two contracts from that level that I just showed you in WTI crude, and the idea is going to be real simple. Number one, I want to take that first contract. I want to fast 5 ticks. That'll take me to $130 for the day, and then we may let that second one run, maybe looking for 10 or 15 or 20 ticks on a payoff, maybe a rotation back up to that 69.25. That's the game plan. That's the game plan. That's what I would like to see happen. If we get out of here with another winning trade, it'll make showing up today worthwhile. But I got to tell you, all in all, this has been just sort of a downer day. I'm not really too impressed at all with what's happened with my personal performance. We've had some, if you want to take a look at the trades, we can go right here to my executions. And that's essentially what we've done today. Ignore the account stuff. That's just a prop account that I'm running. But you can see right here, did a little bit of work in gold, took a loss. Let's go trade by trade. and see exactly what's happened here. Trade by trade, we were up. We had a pretty good opening trade, up about $100, and then we sort of got hit. Gold ran against us. That was a trade that it never really went in our favor. Really never went in our favor. Max adverse and favorable aversion, like 4 ticks. So, I mean, I could have taken the money, but I wasn't interested. I wanted that to win. We gave it a little bit more room than we should have, but I had 100 in my pocket, gave it back, and then came back, grabbed 50 on the next trade, gave back 50, and then the last trade on a gold long was a pretty good one. We got paid off pretty well there. So right now we're at about $80 on the day. So just my own personal trading. This is what I want to see happen. I want to see this crude oil market sort of trade down a little bit, and if in fact we get an opportunity to bid 69.10s, I believe that's a high probability trade. Clive Harrison, good to see you, Clive Harrison. All right, guys, let's go ahead and get on with the program here. There's a couple things that we need to cover just right out of the chute. I had some requests on content that we needed to look at as well, so I'm going to go ahead and do that. We've got to talk silver, though, before we even get started. You can see right here, silver. I went on and on and on, and it's very rarely that I shake my finger and tell people what to do in the markets because I'm not a financial analyst. And I actually took some heat online. I'm going to show you some of the messages that I got yesterday, or one of the messages. I took a little heat for that US 100 loser yesterday, and I'm going to show you exactly why I lost. And I'm also going to talk risk management because if you don't have a risk management plan, and this message blew me away. I don't think it's real, but if it is, whoever wrote it and actually did this needs an attitude adjustment, and we're going to go ahead and see if we can dish one out today. But this right here, the silver contract, we talked a lot about that November's low. Talked a lot about it, and I really said, listen, we had hit that 62% level on silver repeatedly. I mean repeatedly. And what happened? Look at right there. Bang, great trade. Bang, great trade. So you had sort of a daily double bottom there. And what I always say about support and resistance zones, especially when they're big macro ones, when they give way, you've got to get out. And what happened was that 62% zone in silver, beautiful trades. 2 absolutely beautiful trades, bangers. I call those bangers where they just go up, get their money, you're paid off, no fuss, no muss. We're looking for a banger on WTI, and I would love to get that in the next 25 minutes. That'd be fantastic. I just don't know that we're getting well, maybe. We'll see. But we'll manage that thing in real time. In any case, this was a banger trade. These bids up here from about 29.75, those are bangers. That's fantastic. Great work. RH, good to see RH. But what happened was once that level gave way, you had a monthly low in November. Once that level gave way, good Lord, you got to get out of the way. You got to get out of the way. So right now, we're sort of formulating our next play, and it's going to be a bid from right down in this zone. I can tell you that right now. 28.55 is our 13-month EMA. That's a huge level, and also 78%. 28.30. I love the long side of the silver market over the long term. However, right now you don't need to be messing around with anything. What I'm saying is don't commit to the market too big, especially if you're an active trader. Now, the reason why is because our interest rate environment is shifting. We don't know. I'm going to put out a video, a YouTube short here, probably right after we're done, and it's going to talk about our interest rate expectations. And we're not expecting a rate cut until May. That's 5 months. We could see a tremendous sell-off in commodities and stocks between now and then. I think we're going to see it. I really do. I don't think – listen, I have no doubt in my mind that the pro-business administration, the Trump administration, will get the economy going, and your stocks will go higher, but it's not going to happen in the short term. I think you're going to see a big-time pullback from levels that we're at probably now. I would wait for a rally up to maybe where we were before the Fed, but I think we're coming off, and I think commodities are going to be a victim too as well. Now, in one respect, it's going to help because it's going to keep the price of crude oil maybe down a little bit, but metals, I would be concerned if I was holding long metals right now and I had to get out in the next 6 months. Be very careful with that. We warned a lot about this silver trade. If, in fact, we broke beneath last month's low, it was just going to be a train wreck, and boy, was it. Here's a 4-hour chart. So if I'm trading this on a 4-hour, a couple of things I'm looking for. This is beautiful symmetry, guys. There's your washout beneath last month's low. Bang, rotation. What do? We go right back up to that area that was beautiful support, and now it's resistance. That was a great sell up there, and now we're just creeping. So a couple of things you could do. You could sell if you get a retracement up there. I would wait for this bid right down in this zone. You could probably start bidding at 26.55-ish, or you could be a little more patient and wait for 28.55-ish, or you could be more patient and be looking at like a 28.37, something like that. Had to cover silver first. We're going to cover gold in a minute, but a lot going on in these markets. All right, let's get after it. Okay, double down, double your deposit. New Year's, somebody's always wanting to trade right after New Year's. It's going to be the year that we make all of our dreams come true. Well, Switch is there for you, so if you need to trade, get in, make the most of your money. Make sure that on your deposit, you get as much purchasing power as you possibly can. That's what Switch does. Mark Oatley. Hi, Shane. This is Mark Corp. Had to swap to YouTube. The stream is not working on HTT. Oh, that's too bad. Yeah, I saw your message back today. It looks like J-Pal did some damage. Yeah, let me see. I'm watching the stream right now. Oh, the stream's not working on HTT. 1 minute, guys. We got a little technical difficulty. Let me see if. Okay, just a few more keystrokes here, and we should be good to go. And it'll be running back in the room. The technical issues just are more and more these days. So what we're going to do is we're going to get this loaded up on the YouTube, or excuse me, on the switch markets, not the switch markets, but the HTT stream. And what we can do there is at a future date, you can go ahead and check out our analysis. We haven't really done much as of yet, but that's too bad because we did have a pretty good setup that I just talked through on WTI crude. So. Now we're trading up to 69.50, and I'm not going to get my trade. I'm not real happy with that. All right, here we go. All right, we should be good to go in the trading room. Let me see you, JJJ. Good to see you. Good to see you, Jazz Effects. Good to see you. All right, guys. All right. This thing's up and running now in the trading room. My apologies again. I mean, there's just a million dials to flip. There really is. All right, let's get back to what we were doing. Okay, so in any case, right here, this was your silver. Just to recap, this is a major washout. And you need to be very careful. Don't hold longs right now is what I would say. But your bid's going to be down there at about 28,308, somewhere in there. And then as far as our other trades, this was going to be the scalping. I already went through, sort of showed you exactly how I was performing for the day, which somewhere right in here. We're looking for like a 69.10 bid, but I have to tell you, it doesn't look like that we're going to get it here. I'm on WTI crude futures. We broke above the daily moving average, so that's long gone. And then as far as my trade performance today, you can see we were in the profit. We gave it back. We got back in the profit. Now we're sitting up about $80. So I'm not really blown away. It's not a great day at all. I'm looking for 250 to 350 to make this even worthwhile showing up by the time you pay commissions and actually figure in your winning days versus your losing days. All right, so that pretty much brings everybody up to speed. Let's talk about exactly what we're going to do here today. Monday was quiet. Tuesday was retail sales. Wednesday was the Fed announcements. Thursday is the BoJ and the BoE. Interesting. That's what we're going to cover today. And then Friday is the core PC price index. Full disclosure, I'm going on holiday, so I'm going to be gone tomorrow. I'll be gone tomorrow through, January 2nd. So we're going to go ahead and take a little bit of a break, maybe recharge the batteries and drink some eggnog and hit the gym. This has been an interesting quarter, that's for sure. With Connor moving on, Nick moved on early in the year. Connor moved on, so now it's just an army of one, at least for right now. JC, good to see you. Yeah, my apologies on not getting the stream up and running in the room, but you'll be able to watch all of it on past stream. In any case, that's where we're at right now. We're going to grind forward. I'm going to be out. Check that upcoming stream schedule. That's going to give you the streams for the new year. That's going to give you streams for the new year and exactly what we got planned. We're going to hit the ground running. We're going to hit the ground running. That's for darn sure. No worries, Shane. Absolutely. Sorry about that, Mark. In any case, here we go. BoJ and the BoE, and the Friday's a core PCE. If you're going to trade tomorrow, be ready for core PCE. There was a lot made of inflation yesterday, and it's one of those things that's going to drive the markets crazy, absolutely crazy. All right, let's go ahead and start off with some of the things that I was approached about on YouTube yesterday, and I'm going to go ahead and just address these. One of the things on this stream, and I'm not BSing you, I'm going to show you. Let me see. Dave Thinking Systems, good afternoon from the UK. What I'm going to say about this stream, now it's not a huge stream. We're not going live to 10,000 people. But what I am saying is this. Sometimes you put something out there, a trade idea out there, and it loses. One thing about this stream is we don't run from losers. I don't sit there and go, oh, well, we lost, but we won over here. Most guys online and on the internet do that. They say, well, don't worry about that. Oh, we won here. And they'll throw out 50 million trade ideas, and they'll win some and they'll lose some. I don't do that. I put trade ideas out that I think that are going to win. And I like to win. I don't like to lose. This US 100 trade absolutely chewed us up and spit us out yesterday. Destroyed us. Let's go ahead and take a look at the price chart. You can see right there. There it was. Bang. That sell-off right there, 3.83% on the US 100 CFD, was epic. It was epic. And why did it happen? It happened because Jay Powell decided that he was going to crash the markets yesterday. I'm not going to pull any punches here and sit here and lie to anybody. I haven't seen a press conference that bad in a long time. Go back, watch us yesterday covering it live. I couldn't believe what I was hearing. Every single one of his answers was almost standoffish and combative towards the new administration. It really was. It was a whole like, well, we don't know, but right now everything's going really great, but we don't know what's going to happen with yada, yada, yada. You guys get what I'm saying. There was a lot of talk about still fighting the COVID inflation. I can't believe that came out of Jay Powell's mouth. That's ridiculous. All right, I'm not going to go on a rant here because there's no point. That was the big sell-off here. And this trade idea was an abject loser. Let's dial it down to a 1-minute chart, and I'm going to go ahead and try to find the spot where our entry point was hit, because it's very, very important of why this thing lost. Always remember, when you lose, you got to be ready. You got to be ready to learn. You can't just say, oh, God, and then go out and hit the bar and start drinking or be self-destructive. There's no reason to do that. You lose a trade, you move on. But before you move on, learn as much as you can from it. Right there was our entry point, right around 21,850. We were looking for a bounce up here to 925. You'll see right there. There's sort of your 1 minute. This is a 1 minute chart. A little bit of an order block there. I really thought we had a shot at it. In any case, right here, what time is it? 12:05 p.m., 2:05 p.m. Eastern. Yeah, he hinted he'd cut interest rates around April or May. Yeah, RH, nobody knows. But yeah, that's sort of what we're pricing in right now. We'll have a video out a little bit later today on it. Great Britain Pound USD, absolutely, JC. We're going to cover that and the USD JPY. But right here, this US 100, 12:05 p.m. market crashes. Why did it crash? There's your initial, the Fed announcements, big time correction, and then bang, bang, we wait 4 minutes, and then we really get that next rush of sellers in. You see that a lot, definitely after an economic release. I did not expect the markets to trend yesterday, but they did trend, and they trended south. So right there, you can see that we got chewed up over the course of about 4 minutes. We got pretty much stopped out. Our level did not work. You had an opportunity maybe to get a bounce and get out at break even there. But even if you held on to this trade and took the big ride down, as soon as this thing breaks back up and gives you a shot at break even, you've got to make an adjustment. You've either got to tighten your stop loss up to maybe our key level, or you just get out of the market because things aren't going well. Also, what I would say is this. Look at this area right in here. The area from when we actually got the Fed release to the area when the presser started. We recovered. At this point, I was thinking, yeah, this trade may win. And then Jay Powell started talking. And he cost people millions and millions of dollars yesterday. This was him. This was all him. It was nobody else. That's him. That's him answering question after question after question. And then the momentum, the presser went till about 120. We were here for a long time. And then the market absolutely cratered. You got a bounce toward the end of the day, and then it cratered into the close. So why do I bring all this up and go through this trade? Because I got this message yesterday, and I hope whoever left it's out there watching. Let me see. Trade follow-up. This was in the YouTube video that we put out, the YouTube short on Forex Signals TV. I followed your bullish trend chart, and I bought, and I lost everything today. I lost everything. And it's the holidays. I couldn't lose this money, and I lost everything. Oh, my God. All right, a couple of things. Number one, I firmly believe I'm being trolled here. But number two, you've got to use some risk management. You've got to use some risk management. 1 to 3% on any given trade, a maximum of 3. Hell, I'll give you 10% if you want to be very risky. Okay? So you can go ahead and do that. But the second thing that I want to say is it's right there in the charts. You mean to tell me that you didn't have a finite stop loss when we're getting smashed here? And then we actually rallied back. So let me get it straight. You lost everything, or you lost a ton of money, and then you made it all back. At this point of the trade, if you're still in it, you're greedy. You're really greedy. You just took a tremendous amount of damage, a huge drawdown. You didn't lose the house, but you lost a couple of cars. And now they gave you your cars back, and they gave you your dog back, and your wife came back, and everything's great? And you mean to tell me that we're going to let it ride? If that's your mentality, doing stuff like this, you are gambling. You are gambling. Quit trading. I take full responsibility for the trade being a loser, but I also told you guys a million times, and I told whoever that was, that trading during the Fed is the most not the most volatile time to trade and the most risky time to trade. You can make a lot of money there, but you can also lose a lot of money. Guys, use your heads. Be risk intelligent. Have some savvy. Get in there and say, listen, I want to be able to do what? Trade tomorrow. You always trade for tomorrow. Watch your risk. It's very important. So whoever sent that message out there, if you lost everything, I feel for you. I've been in that situation where I've lost everything, and I did it in the real estate market. And it takes you some time to build back. But when you come back, take the lesson. Remember what happened. Don't ever do it again. That's all I got to say. All right, let me see. He's responsible for everything he does like the rest of us. Absolutely, Dave. That's the way I look at it. And, that being said, if you guys want to talk trading, send me a PM. I'll answer any questions you want. I'll try to help out the best I can. When a trade loses, it loses, and I don't like to lose. Believe me, I went for a ride on the NASDAQ yesterday too. The difference is I cut my losses off and then regained them. That's the difference. So you guys are all budding professional traders. Take a lesson from that. That's very, very important that we understand risk tolerance, and also be understanding just how to move in the markets. You got to always be on your toes. Don't ever get chopped up in this. And at this point, if you find yourself holding longs from up here when the market's down here, the war's over. Pack it in and come back a different day. All right, guys. I wanted to say that, though, to start off because it's a good lesson really to have going into the holidays. All right, news of the day. BoJ monetary policy statement, the BoJ interest rate decision. The BoJ held rates static at 0.25%, and then also the BoE interest rate decision. The BoE held rates. So what did we see over the last 24 hours? Well, we saw a lot of things. We saw, number one, we saw Jay Powell go hawkish, and we saw the rest of the world go, whoa, whoa, let's wait a minute. Let's wait a minute and see what happens. These rate pauses were sort of an indication that the world doesn't know what's going to happen with the new Trump administration, and they're a little bit sketchy about what the Fed's going to do, and it's just really difficult. Let me see. RH, pay no attention to such idiots. Yeah, but I mean, I've been there. I've never taken anybody else's word for it and taken a big loss. I haven't done that, but I've been there, so I know what that feels like. So if somebody actually did that, I think I'm getting trolled myself, but if somebody actually did that, don't lose the lesson. Take the lesson with you, because you can come back better and stronger. You just don't do things like that. That disrespects your money. That disrespects your family doing things like that. Don't do that. Don't do that. There's lots of ways to make money, or at least control our losses. All right, in any case, the highlight of this right here is, okay, we held rates, and that's all great, but the BoE MPC votes unchanged. They're at 6. Well, 3. So there's a little bit of a split in that BoE boardroom. I'm curious to see how we move forward. That uncertainty makes for absolutely great Forex trading. Let's get out to Great Britain Pound USD. What I would say right now is like I always say, markets have memories, and it's an old cliche, but it really is the truth. And when we look at something like potentially this, got sort of a swing low down there in November. That's November's low. Now, the Forex is a little bit different than commodities. Sometimes you see big washouts beneath those key levels, last week's low, yesterday's low, last month's low. Forex is different because the market is so huge. The volumes, I almost expect to see a little bit of rotation here. So definitely mark that down. That's November's low right down there. What is the low? 24.87, 124.87. Let's step back to a weekly. Okay, it's clear cut there. The biggest thing that I want to point out is let's go to a monthly. Okay, now can we get any convergence at all with this zone? Not really. Do we want to buy there or sell there? I think you got to be a seller. It looks to me like that 78% level's long gone. 125.50, it looks to me like we're throwing that in the rear view. Not quite yet, but just about. So if we do trade beneath November's low, it may not be a steady ride, but as soon as we trade beneath that low, I'm going to be looking to sell. Now, I wouldn't do it with a market order. I would wait for a pullback somewhere right around that 125.50, but what that'll prove to us is that, yeah, we are moving down. The 3-month trend is intact. I fully expect us, once we take out this area, you're going to probably run down to 123. That's sort of the rules that I use with Fibonacci's is once you take out a 78%, that's the last line in the sand. That's it. We either turn around or we don't. And if we don't, then we definitely make a run at that 100 level, that 100% level. In this case, our swing low, which is going to be right down there at 122.99, 123. Now down there, I would be a bidder. But from right in here, this little area, this little zone is going to give us a pretty good opportunity to sell. So just keep a close eye on your key levels. Always remember your key levels, guys. When you're trading, you're going to want to just really, really be hyper-focused on last month's low. We trade beneath that. We're already beneath that monthly 78%. We're really going to be looking to sell. Now, as far as a 4-hour chart, I know most of you guys don't pay much attention to monthly charts, and that's okay. That's just an old habit for me. I want to be short. I really do. I mean, I'd love to be tall, but being short, you can make money just as fast. Sometimes, actually, I like selling a lot more than I like buying, to be real honest with you. But right there, 125.66. little pullback to that area, maybe 60, 65. That's a pretty good zone. The breakout's on right there. Bang. There was the big move yesterday. And then you got the retracement, and then bang again when the BoE came out with the decision that they came out with. Fascinating stuff. So, JC, I hope that helps. That's how I would be looking at the Great Britain pound US dollar. As far as the dollar yen goes, dollar yen right here, sort of I would need a very good reason to ever short this. 30-minute chart. I mean, it's one leg up right after another. You guys can see that. I mean, that's all there is to it. That's according to Hoyle, Elliott wave count. I mean, it really is. I mean, we got VJ in the room. He's the Elliott wave expert, but I will say this, just the quick and dirty analysis. Right there was your initial break. So you could say that maybe that was a 1, a 2, a 3. There's your 4, your 5, your 6. So remember, 1, 3s, and 5s move. 2s and 4s are pullbacks. Just depends on what time frame you want to use. We may be able to get a better look on a 4-hour time frame if you want. That'll give us a sort of that right there. I mean, that is just really extremely bullish. The yen's in trouble, and in a lot of ways, hey, listen, the BoJ and the Japanese government, they're okay with a devalued yen. It's not the end of the world. It makes those exports hyper competitive on the international stage. So when you do see something like that, you say, okay, is the yen? I mean, they don't have to cut really, with the Fed doing what they did. So they just stood pat and waited to see how this thing turned out. I want to be long. I want to be long the dollar against the yen. There's no question about it. I want to be long the Great Britain pound against the yen. I mean, if you guys remember that Guppy trade that we outlined a couple of months ago, we have a video coming out here in the not too distant future on institutional trading. And I do a little bit of a section on technicals that institutions look at. You know, most institutional traders, they have an order book in front of them. They don't really they're not stressing over 5-minute charts. But we talked about that hammer formation back in August and what it signified. And realistically, that's probably the break. That policy move's probably the break that's going to really send us towards those all-time highs. I would want to be long the Guppy. I would want to bet against the yen really any chance that I could. But I do like that dollar yen a little bit better to the top side. So let's go ahead and take a look. Your all-time highs, you're right up there at 161.95. So what you have is really 162. That's where the BoJ got involved. So we could definitely be sellers up there. I don't have a problem with that. But that's 460 ticks away. You can see we've sort of traded both sides of November's range. Okay, so what do I want to do right now? Any kind of pullback we get, I'm a buyer. I mean, that's just the way it is. On our daily chart, are we going to get a pullback? Probably not. How about a 4-hour? 4-hour chart? We need a pullback. We need one. We're not going to get one probably. So I would wait and see how today pans out. Perhaps we could build a Fibonacci retracement sequence that goes back before the Fed, or as the Fed spoke Wednesday. That would be absolutely beautiful if we could get a nice swing high in and then a pullback. We'd have an opportunity to bid like 156.25. That'd be a great bid. That'd be an absolutely great bid. So I would love to do that. The opportunity has to present itself. And right now we're on the sidelines. One last thing I want to show you, and I know we use a lot of RSI with our new strategy stuff that we've been putting out there. I use a lot of RSI for confirmation. And I would sort of be remiss if I don't sort of explain, how RSI can lead you wrong. Okay, we're severely in overbought territory. The RSI right now is reading, 80? Remember, anything over 70 is overbought, so we're looking to sell the market. You need a good reason to sell this market right now because this is where people can really get chewed up. Right there, we were in overbought, so theoretically, you could have sold right there just according to the RSI and nothing else, and you took just an absolutely tremendous draw of about 250 pips. I don't recommend that. So the RSI, even though it is useful, especially with those moving average crossover strategies, when you're looking at something like this that's just horizontal support and resistance zones and the market's trending, you have to be very careful. So I really wouldn't be looking to sell this thing till we get up to those all-time highs. Then we may see some BoJ intervention, but for right this minute, I would be buying pullbacks the entire way with the yen. So sort of a lot different dichotomy there. Great Britain pound USD versus the dollar yen. We're starting to see all these major currencies. They all have their own personalities. And this year, 2025, we're going to start seeing each personality really spike. And I love that. That means we're going to have a different game. We're going to be able to capitalize on things. Let me see. JC, do you like RSI versus stochastic? I prefer RSI just because it's easy. Stochastics are easy too. They're the same thing. I mean, it's a momentum oscillator. You're just using different secret sauce to get to the point where a market's overbought or oversold. for me, I go with RSI. I find it really easy. It's over 70 and then under 30. And at least when I see that it's over 70, I know that the world also thinks it's overbought. So maybe somebody will do something stupid and sell and give me the pullback that I want to follow that trend. That's sort of what the hybrid trading approach is about, is figuring out what the fundamentals are going to do to something and then getting your good entry points. I think any kind of good pullback on the yen is going to be pretty good, barring BoJ intervention. Now, if the BoJ steps in, anything can happen. You saw what happened yesterday with the Fed. Let me see. Mark Oakley, the British economy is reacting to punitive budget a few weeks ago. Yeah, and we also had some questions about what's going on in the U.S. with the government shutdown. So let's go ahead and get out to that. I mean, there's a lot going on the political side of it. Budgets are a big deal with the government. This is going to be a big one for the United States. Now, we had a huge spending bill went in front of Congress the other day, and some of the things in it were absolutely ridiculous. Congress voted themselves another raise. There was a whole bunch of vacation time in there too, and there was a bunch of just pork, just crazy pork. And what pork is when these congressmen report to their districts, well, I went and got you $50 million for this or $20 million for this. And clearly the bank's been open underneath the Biden administration. There's no question about it. The government spending in the United States has been incredible. And it was huge under Trump's first administration. There was a lot of spending, and Trump's not afraid to spend money. He's going to spend a lot of it. We're just curious to see where the revenues are going to be and if, in fact, there will be anything that happens to the budget. The budget runs a deficit every year. The United States runs a deficit every minute of every day. The question is at what point do you run out of lenders? That's for sure. So that's what we're looking at here. Government shutdown looms. What could this do to the market? The biggest thing that I would say, the biggest impact that this could have on the market is going to be clearly in your U.S. equities. So something like the U.S. 30, which had its first 10-day losing streak in 50 years, capped off yesterday. If, in fact, we see a government shutdown, that means that the government jobs are going to be sort of, in question. And they're already in question because we have a lot of cuts coming in. We got the BoJ committee with Musk and Vivek Ramaswamy, and these guys are supposed to really refine everything, streamline the governmental approach. That means a lot of people are going to lose their jobs if they're government folks. Okay, that's fine and dandy. But remember the portion of our last NFP report that was government jobs. We haven't been relying on this much creation of government jobs in a long, long time. If, in fact, this government shutdown comes and this budget doesn't get passed or there's no compromise met or whatever, you're going to see some real issues when that BoJ committee comes in January on the back of a government shutdown. I'm not sure the government will open back up ahead of Trump's inauguration. Fascinating time. What could it do to the markets? It's going to send them down. It's going to send stocks down because there's going to be real questions about the future of not just the U.S. economy, but government spending. Believe it or not, a lot of these Dow 30, a lot of these US 30 companies rely on government spending and government contracts. So there's going to be some pain. No question about it. Spike high right there before your Fed sell-off craziness. And what do you got right there? US 30, pull back right to 38%. We are still very much in bearish territory. Don't get fooled, guys. I've been reading a lot of pieces today about Dow bounces back, Dow back in the green. And I'm looking at this going, hey, listen, you're on a 10-day losing streak with a major gap down, and you've retraced a little bit. Watch yesterday's low. Yesterday's low is a big deal. If we trade beneath that 43,756 area, boy, look out. Look out. We make another leg down. The sellers are involved now. Things have changed. And a lot of it does go to the government shutdown. So that was a great question that I received earlier today, and it was a really good one. So thanks for the question. It's going to hurt equities. I don't know that anything's going to help commodities either. We're going into an interesting period. It's an interesting time. In any case, right here, what I want to talk about is the news of the day. U.S. GDP comes out. Nobody believes that it's that strong. They don't, and that's just because you have an outgoing administration. A lot of questions about the validity of these numbers and whether they'll be revised down. Initial jobless claims is a big one for me. That's really the key for me today. 220,000 beneath expectations and also beneath the previous release. So theoretically, that's an improvement in your employment situation, but you see manufacturing in the tri-state area in the northeast of the United States absolutely crashed. Absolutely crashed, so that's not good. Existing home sales are up a little bit, so that's sort of a positive for this time of year. And then also your leading index, I have no idea what that is. Natural gas storage, though, that's not uncommon for this time of year to see really a short or a draw in supply. This is the big one, though. This is the chart. This is the weekly initial jobless claims. And what I want to point out is this is sort of where we were last year. Here's where we were in January, February, March. And then we started ticking higher and higher in June, bit of a pullback, and then we started getting sort of back to normal. But that pullback right there in September, right around those rate cuts, remember those interest rate cuts we had in September? You can see we're still up on the top quadrant of this year, and then we got the big spike. I think there's real concerns about the employment situation. That government shutdown is going to play into that narrative as well. So there's a lot going on, guys. There's a lot going on. Now, as far as what I would be looking to do going into the holiday season, number one, I would be conservative, very conservative, very conservative. And I think that this silver market's probably going to give us our best opportunity. We'll have a trade idea out later today. I want to see where this market sort of closes today, but that bid area right down there from 28.50 to 28.30 is rock solid for silver. If it gets taken out, it gets taken out. That means something else big happened. You got core PCE numbers tomorrow. That's an inflation number that the Fed looks at. So be very careful with that. A lot of people are going to be trading that. And also as the day goes on tomorrow, you're going to see liquidity leave the market in a big, big way. So definitely have your eye on silver. Now, as far as gold, I promised a little bit of gold price action. This is interesting. We did a video on YouTube about beat the market maker strategy, and it came out a while ago. This is one of the things that I highlighted. It's called a failed auction. Your low right there is 25.8383. That was yesterday's Fed day low, the Fed crash low. And what was your low right there? 25.8373. 73. We went 10 cents. 10 cents, which isn't even the spread in this thing. Traded beneath yesterday's low, and then we rallied, and now we're coming off again. Be very careful. For me, I'm going to wait for the dust to settle after the A-bomb that Jay Powell dropped yesterday on the markets. I want to see a couple of different things. Number one, that's this weekly spike low right there from November 11th. That was election week. I want to keep a close eye on that. That could potentially be a demand zone for us. That low is 25.36, somewhere down in there. But let's go to a monthly. Really, the level that'll get us, sort of in a lot of confidence and potentially a position is going to be down there at 24.82, 24.85. So keep an eye on last month's low. If in fact that does wash out, I would love to be a bidder from right down in here. Remember, the macro picture is still extremely bullish for a gold. The problem is things are changing. We've already been told that there's going to be some negotiations early in 2025 regarding your Ukraine situation, Russia-Ukraine. That could potentially be resolved. You also have a situation where rates are going to be higher for longer. That's two bearish market drivers. What happens if that dollar really goes up and stays at 109, 108 to 109, our dollar index? That's going to be a big drag on commodities. So I'm watching gold closely. The technicals still tell us to be bullish. But what I would say is, I definitely want to bid 38% and follow the trend. But as far as I'm concerned right now, holding longs is sort of problematic in a lot of different ways because of the fundamentals. Definitely. All right, guys, I'm going to go ahead and kick off. Clive Harrison. So, Shane, you're not going to pack the 4x4 and visit the family over Christmas? No, I'm going. Yeah, no, we got the truck out there. We're going to be packing the truck probably Tuesday, something like that. Tuesday, and then we'll head over for Christmas and then through New Year's. Yeah, but it's going to be a good one. All right, everybody, that's pretty much a wrap. Be careful the rest of the day. Be careful the rest of the session. I expect some fireworks around core PCE tomorrow, so be ready for that. But as far as our participation as tomorrow wears on, you're going to see a lot of people just get out of the office and just take an early vacation. What that means is limited liquidity, and it means the market can just blow either way really fast. All right, so I'm going to be off for quite a while now, really till about January 2nd. I'll have the stream schedule up and running, and the streams in 2025 are going to be different. They're going to be interesting. We're going to do some different things. You can already see we're doing some tick scalping live for you, throwing some trade ideas out there. Also, we're going to keep on with our video YouTube production and things, but things will be changing around here. We do have some different ideas on ways that we can help you guys develop as traders. But I want everybody, if you're tired and you've had a rough year, take some time off. All right, take some time off and get away from the markets. Come back ready. Now, we're not going to dive in with a huge amount of risk right away. We're going to let these markets sort of settle out. That first week of the year, it's sort of like the first two rounds of a title fight. If we got Fury Usyk on Saturday, the first couple rounds of that fight, they're going to be feeling each other out. That's how I like to sort of ease into the year. That's how most traders, they like to ease in and step back and take the lay of the land. So the next week or so, what you can do, if you don't want to trade, do some review. Sit down. Write up your goals for next year. Take a look at your performance from this year. What did you do well? What could you do better? Do you want to trade? Ask yourself that question too. Markets aren't going to, not much is going to happen. You might get a big crash or something. We did Christmas Eve 2018. That actually came up in the presser yesterday. My point is this: anything that happens is going to come out of left field, so be very careful with your money. As far as over the holidays, that would be the one question I would ask myself. You got all the performance reviews and all your P&L and all that jazz. What is the one question? Do I want to trade? Make that decision. And if you decide that you want to trade, then we'll be here, and we're going to kick it off. We'll start piling risk on probably the second week of the year. I want to see what happens through the first full trading week, and then we'll start maybe up in the position size. We just got to wait and see what happens. That's about all there is to it. All right, Dave, thanks for this. Have a great Christmas. Yeah, you have a great Christmas. RH, I'm not live. I won't be live again until January 2nd. This has been an interesting year. I know there's a couple of guys out there that I've worked with over the years that are watching, so I want to say hi to them and have a Merry Christmas. It's been an interesting year, though. We've seen a major defection in our coaching staff. Last year at this time, where there was 3 of us, now there's 1 of us, and that's okay. That's just the way that it is. Both Nick and Connor decided they were going to pursue other interests and other opportunities, and I wish them all the best. I think they're going to have a fantastic future in the markets and a fantastic 2025. For me, I will be here. I know I'm going to have a fantastic 2025. I can't wait to get started, but for right now, it's time to step back and relax for a week or so, have some holidays, visit some family, some loved ones, take the stress out of it. That's a wrap, though. That's a wrap for 2024. It's been a great year. A lot of you have been here with me through most of it, if not all of it. I want to say thank you for that. I think that 2025, it's not going to be like this year. Things were pretty easy this year. We knew exactly what the Fed was going to do. We don't know now. We don't know. So as long as we stay frosty and we're prepared and we're ready, and number one, we want to trade. If you want to trade, the markets are going to be open. Anything can happen. Get in there, get hot, run the number way up there for 2025. All right, everybody, Merry Christmas and a Happy New Year. You have a fantastic, fantastic holiday break. It's always my pleasure doing these live streams. I really enjoy them. They're going to be a little bit different this next year, but hopefully in a good way. If not, send me some questions, anything you want to know. Private message at howtotrade.com. And if you need a broker, cruise on over to our partner broker, Switch or Awanda. That's a wrap for 2024, everybody. You have a fantastic holiday season. Finish the year strong. The best to you and yours. Thoughts and prayers to all those that are struggling this year. Next year is going to be a good year. All right. Signing off for 2024. Trade the action well, and we'll talk soon. See ya.